Have you ever wondered how the ultra-wealthy manage to keep their tax bills ridiculously low? Why do they seem to get away with paying next to nothing in taxes while the rest of us struggle with hefty tax burdens? Well, the truth is, they're not breaking any laws. They're just playing the game better than most. The rich understand that tax planning is the key to legally minimizing their tax liabilities. They employ teams of experts who meticulously analyze the tax code, seeking every possible loophole and legal strategy to reduce their tax burden. And it's time we learned from their playbook. So today I'll take you to how the rich legally pay zero taxes. If you're new to the channel, hit that subscribe button and that little notification bell icon so that you don't miss out on any of our video updates. Plus, it helps us spread the Thrive Wise love to help more people thrive wisely. Now, let's begin. Let's get one thing straight. Tax evasion is illegal and unethical. It involves deliberately hiding income or assets from the tax authorities, which can land you in serious legal trouble. On the other hand, tax avoidance is perfectly legal. It involves structuring your finances and investments in a way that minimizes your tax obligations within the confines of the law. Many people mistakenly assume that the wealthy engage in tax evasion, but the truth is, they're masters of tax avoidance. They understand that the tax code is filled with complexities and loopholes, and they exploit these to their advantage. From setting up complex trusts and offshore accounts to leveraging tax-advantaged investment vehicles, the rich have an arsenal of strategies at their disposal. But here's the catch. The average person often lacks the knowledge and resources to navigate these intricate tax strategies effectively. The tax code is a labyrinth, and without proper guidance, it's easy to get lost or make costly mistakes. That's where tax professionals and financial advisors come in. They're the guides who can help you navigate the maze and uncover legal ways to reduce your tax burden. So let's take a deeper dive into the strategies the wealthy use to legally minimize their tax bills. But first, let me set the stage with a little analogy. Imagine the tax code as a vast, untamed jungle, filled with twists and turns and hidden dangers. The average person is like a lost explorer, hacking away at the vines and foliage, trying to find their way through this labyrinth alone. But the wealthy? They're like seasoned adventurers with a team of skilled guides, machetes in hand, expertly carving out paths and uncovering hidden treasures. Or in this case, tax savings galore. So let's take a look at strategy number 1, tax credits and deductions. Even the average Joe can take advantage of these, the tax credit and deduction. But the rich take it to a whole new level. They have entire teams of accountants and financial advisors scouring every nook and cranny of the tax code, looking for every possible credit and deduction they can claim. From charitable donations to business expenses, they leave no stone unturned. It's like they're playing a massive game of supermarket sweep. But instead of grabbing groceries, they're snatching up every tax break they can get their hands on. And they don't just stop at the obvious deductions. They meticulously plan their finances to maximize every credit and deduction available, no matter how obscure it may seem. For example, did you know that if you live in certain states, you can deduct the sales tax paid on a new car or boat purchase? The wealthy certainly do, and you bet they take full advantage of this little-known deduction. Number 2. Offshore accounts. Imagine a tropical paradise where your money can bask in the sun, free from the clutches of the taxman. That's essentially what offshore accounts offer the wealthy. By stashing their assets in countries with favorable tax laws like Switzerland, the Cayman Islands, or Bermuda, they can legally avoid paying taxes on that income in their home country. Of course, setting up offshore accounts is no walk on the beach. It requires a team of experts who know the ins and outs of international tax laws and banking regulations. But for the ultra-wealthy, it's worth the effort, as they can potentially save millions or even billions in taxes. Take, for example, the leaked Panama Papers scandal, which revealed how some of the world's richest individuals and corporations used offshore accounts and shell companies to hide their wealth and avoid taxes. While the practice itself was legal, though ethically questionable, it highlighted just how far the wealthy are willing to go to minimize their tax burdens. Number 3. Trusts and foundations. Trusts and foundations are like the fortress that protect the wealth of the rich from the tax invaders. By setting up these structures, they can shift assets and income to beneficiaries who are taxed at lower rates, effectively minimizing their overall tax burden. It's like having a secret family compound where their money can live in peace, away from the prying eyes of the IRS. And just like a fortress, these structures required skilled architects, aka lawyers and financial advisors, to construct them in a way that maximizes their tax-saving potential while still adhering to the letter of the law. Take the example of the Walton family, heirs to the Walmart fortune. Through a complex network of trusts and foundations, they've managed to pass down their multi-billion-dollar wealth to subsequent generations while minimizing estate and gift taxes. Number 4. Real estate investments. Real estate is a favorite playground of the wealthy when it comes to tax avoidance. From depreciation deductions to capital gains exclusions, there are plenty of tax breaks to be had in the world of property investments. Imagine a skyscraper full of apartments and offices. Each floor represents a different tax strategy, and the wealthy are like expert tenants, strategically occupying the most advantageous units. They know exactly which floors offer the best tax views, and they're not afraid to move around to optimize their savings. One particularly savvy strategy is the use of like-kind exchanges, which allow investors to defer paying capital gains taxes when they sell one property and reinvest the proceeds into another similar property. It's like a real estate version of tax-free rollover, and the wealthy love it. Number 5. Tax-advantaged investment vehicles. If you thought regular investments were tax efficient, wait until you hear about tax-advantaged vehicles the rich use. From 401ks and IRAs to municipal bonds and annuities, these investments are like money shuttles that can transport your wealth to its destination with minimal tax turbulence. The wealthy have entire fleets of these vehicles at their disposal, carefully choreographed by their financial advisors to maximize their tax efficiency. It's like they're operating a well-oiled transportation system, seamlessly moving their assets from one tax-friendly location to another. One prime example is the use of Roth IRAs. While traditional IRAs offer tax-deferred growth, Roth IRAs offer tax-free growth, meaning the wealthy can let their investments compound over decades without ever paying taxes on the gains. It's like having a golden ticket to tax-free riches. Now get ready for the piece de resistance, the tax-saving strategy that truly separates the wealthy from the rest of us mere mortals. The charitable foundation. This is like the holy grail of tax avoidance, a brilliantly legal way for the rich to keep their wealth in the family while also reaping massive tax benefits. Here's how it works. The ultra-wealthy create a charitable foundation, seeding it with millions or even billions of dollars. Then they claim a hefty tax deduction for these quote-unquote charitable contributions. But here's the real kicker. The foundation is typically run by family members or close associates who can dole out the money as they see fit, whether it's funding scholarships, supporting causes they believe in, or even paying themselves handsome salaries as quote-unquote administrators. It's like having your own personal piggy bank, except this one comes with a shiny tax-exempt status. And the best part? The assets in the foundation can continue growing tax-free, creating a perpetual stream of wealth for generations to come. Just look at the Bill and Melinda Gates Foundation, one of the largest private foundations in the world. Not only has it allowed the Gates family to avoid paying billions in taxes, but it also serves as a vehicle for them to shape public policy and wield immense influence on a global scale. In the end, the rich have mastered the art of tax avoidance through a combination of legal strategies, from offshore accounts and trusts to real estate investments and charitable foundations. While complex, understanding these tactics is key to navigating the tax code and potentially saving yourself a fortune. Also, don't forget to drop your burning questions or thoughts in the comments below. By the way, what's the craziest legal tax strategy you've heard of? I'm all ears. Well, that's basically how the rich legally pay zero taxes. And thank you guys so much for watching today's video. And hey, it seems that YouTube thinks that the next video can completely transform your financial situation. Watch it to find out whether they're correct. And please don't forget to click the subscribe button to see more videos on how to thrive wisely. Till next time.